Welcome to Moving Iron with Casey Seymour and Greg Peterson, the podcast for anyone and everyone involved and interested in the business of ag equipment. If you want to understand what trends and market forces are impacting the price of your iron, you've come to the right place. Buckle up, it's time to move some iron.
Hello and welcome to Moving Iron Podcast. This edition of Moving Iron Podcast is brought to you by John Deere. I've got Greg Machinery Pete Peterson back on to talk about what's happening in the auction marketplace. Greg, how you doing today?
I'm doing well, Casey. How about you?
Doing good, man. Doing real good. Well, we saw some pretty busy week in the auction marketplace. A couple of them that I was paying close attention to. One I was really watching a lot. Dell Peterson auction. DPA had one of those case IH Steiger 715 sell, and it had 250 hours on it. And we've seen two of those sell already this year. We saw one back in February that Matichek sold, and it had 710 hours, if I'm right. Brought 579.1, and then Walker Ag Group out of Illinois had one that sold in July, I think, that brought 561, if I remember right, or 565. What was it? Yeah, 561. 561. And then this one that just sold yesterday. So if you listen to this, you'll hear this on Thursday, but it sold on Tuesday. So if you hear what we're talking about, go back and take a look at it. But anyway, it sold for 609. And it had 250 hours on it. Now, the 225 one at the Walker Ag Group and this one here both had similar specs. It was fairly similar machine, but there's a $48,000 swing there in the marketplace. And quite honestly, if you look at the way markets are going right now, there's not a whole lot of reason that you should have been a $48,000 swing in the price of that tractor if you look where corn and soybeans are right now. So and wheat too on that matter. So I guess as you're looking at this, I'm looking at it as I kind of felt like those machines should have been somewhere in that 595 to 610 range is kind of where I feel like they should have fallen in at. Comparatively, especially looking at the one that Matichek sold back in February, that had 750 hours on it, if I remember right. That one brought 579.1. So looking at that one selling where these ones should be, you should be seeing these fall in that 595 to 610 range pretty easily. And I think this one brought what I would consider to be a fair value around there. The other one might have been just a little bit naughty, but you only have three machines out there to make a price point off of. And it's hard to judge which way to place the marketplace is going on three auction values, Greg. So when you're looking at this, what's your thoughts on these tractors that you're watching them sell now?
Yeah, I think it's a great topic, Casey. To me, these are dealer items. So to me,
Right.
With a 1-year-old Case IH 715 like that, I mean, if I'm the seller, I'm going to market the living hell out of it because to not do so, you're just sitting back. And so now in the case of the one early this year, back what was February or March, at Matichek up here in Faribault, Minnesota, higher hour machine, 700 hours, but they ran a 30-second ad on Machinery Pete TV show that said, folks, look, we're selling the 715, 10 days out. And, 579.1 with 700 hours was, I mean, that was good. You and I talked about that earlier this year. Now DPA,
and we were both surprised at the number that it brought. I was off by almost $70,000 on my guess.
Yeah,
you know what I mean. So it was quite shocking.
Again, we just saw Blake and Paul Matichek at Yield Academy last week here in Rochester. I was, we were talking to the guys, and again, I told them on stage that day, I said, you guys are ahead of other dealers in terms of being proactive marketing with your online items. Now they sold it themselves through auction time. Now the one that brought 609 that you highlighted that had 250 hours this last few days here, that was by DPA auctions, and DPA auctions markets as strongly as any auction company. So 609, again, 250 hours, hard cash in this environment right now. I'd maybe chalk that up, like you say, at a minimum, what you'd expect, maybe a little more, crawling over 600K like that. The other one that brought 561, I hadn't heard about that. And frankly, if I haven't heard about it coming up at auction, that's really not a great thing if you're whoever the seller is. So it's just the way it is, So that $48,000 swing, 561 to 609, and when you're selling an asset like that, I mean, you got to lean into the marketing on it. There's no way around that. If you don't, that's what can happen.
Yeah.
That's the way I see it, just to be brutally honest.
Yeah. I mean, these high profile items like this, you gotta have coverage. You know what I mean? People gotta know about them. It's not a 7 or 8 year old tractor, a 5 or 6 year old combine or something like that. I mean, those are kind of everywhere, and if you're looking for something like that, they're easy to find. But this is one of those one off machines. And I would, you talked about a Wheeler auction that before we got started, what that looked like.
Yeah.
And there's some numbers that came through there. And again, you're looking at some older stuff that's 2, 3, 4 year old stuff. But again, it's that coverage and that exposure. I will say this one thing about this machine. I think that's kind of these 3 machines we're talking about here is that they're kind of a one-off unit, right? There's not a lot of them out there, right? If you're looking for something like this, comparatively to what you see on the marketplace, this is you're saving 25 or 30% based on what I've seen so far at these numbers that we're seeing right now. So some of that could be driving that. It'll be interesting to watch when you start seeing the 9RX. 730s and 790s and 830s and 815s and all those start pulling up into the auction area. But watching these 3 things sell, it's hard for me to point at an area where that it feels soft. You know what I mean? Comparatively to what I would guess this marketplace to be at. I really thought Maticheks, when they were going to sell theirs, that if they got 5 1/4, they should be patting themselves on the back pretty happy, and it ended up getting almost 580. So I missed that one by almost $50,000. So take it for what it's worth there. But I think as I watched these other 2 sell, I was like, these are going to be 595, 600, 605, something like that. And when that one sold for 561. I kind of wondered. I had to kind of scratch my head a little bit on that one. Like, why would this one be so much under what the other one was? And I think it goes back to what you're saying. You shining a spotlight on something like that makes a big difference, right? Because every dollar counts on the auction block.
Yeah, and I think particularly when dealers are selling things through online platforms themselves, which again everyone knows it's a very accepted and vibrant way to do it, and but again, if you don't really hammer the promotion, you kind of sit back and say, well, this is the online platform and here's this item. Personally, I think a lot of people maybe look at it without the promotion as that, well, it's just, you don't want people leaning backwards. You want them leaning forwards. And wow, do you see that thing coming up? Yeah. EPA has or Matichek has. You gotta get them on the front of their seat, back of the seat. That's when your 40K is soft.
Yeah.
And it's, you're right, though. It is interesting on these items. The first few items to hit the market of a model, especially these big, humongous monsters, over the 35 years that I've been tracking prices, it's always been interesting. The first few, that hit the market, high interest. What's that going to bring? And it just, sometimes it takes a while to kind of find some footing with a model. And you're right, it'll be real interesting when the big, Deere's new big models start filtering through to the market as well.
Yeah, for sure. All right, let's talk a little bit about the Wheeler sale that you were talking about when we before we started recording.
Yeah, as we were recording this yesterday, so it would have been Tuesday, August 26th. Wheeler Auctions and Real Estate, of course, Paris, Missouri, great outfit. Went up to Carthage, Missouri to have a consignment sale. I guess you'd say a dealer farmer auction. Just a couple highlights. Combine, again, late model combines I think have softened up here the last month. Casey, as we've been talking, they had a 24 model S790, 228 SEP hours, 430. It's a big check, 430,000 hard cash in this environment. If you do look back on the S790, end of 24-ish, we were kind of seeing them in the 482 up. Maybe, I think we saw one over 490, 497 on an S790. Couple tractors. They had a 23 9R X590, 355 hours, went for 411, and a 23 model 9RT 570, 326 hours, went for 380. So those were just a couple of the highlights yesterday in Carthage.
So Carthage, Missouri, okay, and that's where they're selling.
Illinois.
I'm sorry, Illinois. Yeah, okay, all right. Do you know they were consignment sale or was it a farm sale, or do you know what it was? What kind of sale it was?
Yeah, I think again, I call it a consignment. They were drawing in dealer equipment, dealer farmers. So I think dealer farmer consignment is kind of the verbiage they put on it.
Gotcha. Okay. That'll work. those weren't, I wouldn't say record numbers by any stretch, but they weren't, they were, I'd call them average, middle of the road numbers, wouldn't you, Greg?
Mm-hmm.
Kind of how they kind of fall
Yeah,
out.
again, right now, I mean, it's tough on the 1, 2 year old stuff in general.
Oh yeah.
Again, you scrape up over $400,000. That's it's a big check. People will say, well, when we post that information, like, oh my God, retail. Well, the math, that gap we always talk about, machine repeat ratio, or how you look
Mm-hmm.
at it from the dealer average to the auction average, as these numbers have got so massive on the new price. I mean,
Yeah.
people comment on the gaps and they're like,
Yeah.
wow, but really the ratios haven't changed at all.
Yeah.
What it sells for at auction versus dealer rent. Again, what we're seeing right now with late model combines in particular, that's the one area, like that 609 price on that 715 quad. I mean, that one, is at or outperforming. And we can see that with tractors more, I think, right now than we can with combines, unless you go into the 12, 15-year-old pre-def stuff.
Right.
Because I mean, I got another
Yeah.
report that just came in from kind of north central Iowa. Ryerson Auction Realty down by Eagle Grove, Iowa, had a nice sale about a week ago. 2000 model John Deere 8410, 3,429 hours, sold 135. So, that's pretty big money for a 25-year-old tractor.
Yep. That is that's that price range right now that you're seeing move to, is that 150 or less kind of seems to be popping.
Yep.
And you're seeing, we've talked a lot about, higher hour combines that are bringing what I would consider premium cash. You know what I mean? You're talking some of the stuff, we're talking 670 combines with, 2,500 engine hours on them, and they were bringing 100 and a quarter, and I'm like, that should be that's like a $60,000, $80,000 combine 2 years ago. Right. So, so now we're talking $125,000 combine now, but again, those ones that have sold were also in immaculate shape. They looked great, and they had the story behind them. Again, it kind of goes back to that story that you tell about that machine when you put it out there for sale.
Right. Yeah. Again, kind of it just becomes more clear as we go every week, Casey, that particularly in a in a challenging environment like this, when you're selling it, whether you're selling it privately or the auction route, again, you need to be proactive about, at a minimum, just kind of set the table and get the seller on screen, even though hey, people and dealers are the same. Dealers and farmers and all over the U.S., they're like, well, I don't want to put myself in front, talking about this. But that's really the opposite. You gotta flip it. Just stand in front of it and go, hey, I'm Bob. We got our sale next Tuesday. I've had this S670 for 8 years. I bought it from whatever, Smith Implement. Joe's my service guy down there. And that's human. When people watch that through the screen, whether that's, this screen or iPad or whatever, sitting in the cab.
Yep.
Even if you say that don't mean jack, our data screams it. It means something. So again, that's why last week at Yield Academy, I told Paul and Blake Matichek, I said, you guys are ahead of it. You're promoting this stuff, and it's just good business.
Yep, it is. And I think as you watch these machines continue to sell and go up, at the Yield Academy, there were several guys that came up to me and said, how much longer can a manufacturer keep raising prices at the way they are? And my response to them was, as much as you're not going to like what I'm going to tell you right here, the last thing you want to have is a manufacturer stop raising prices. And the reason behind that was, yes, it gets more expensive every year to farm. And, that's looking right now at corn, the price of corn right now, it's the same price it was in 1974. And I saw that on some Facebook post somewhere, and I was like, oh, makes sense. And it was like, 59-cent diesel compared to $3.59 diesel. And, those kind of things, all the stuff that came up there. And I get all that and how expensive it is to farm. But when the price of new isn't moving, it's not that it always brings up the price of used, but if you stop, if it stops tomorrow, like no more price increases ever, we're going to stay at the same price forever. What happens is that readjusts the entire used train behind it. right? So all those machines now are either going to go up in value or down in value. And you and I both know that they're not going to go up in value, right? There's likelihood that you could see some things go up in value, but that's a supply and demand thing, right? Where current supply and current demand is right now, if there's a readjustment, it's going to be adjustment down, and it's going to be an adjustment down between 4 and 10%, depending on what the machine is, and that's based off of what interest rates are and also what depreciation is, right? So those machines that are sitting out there are depreciating every day and those things. So as the price of equipment goes up, which I'm not advocating for price increases here, so don't anyone take this that I'm advocating for price increases. But what I'm saying, if a machine goes up 3% year over year, a new machine does, that typically you're going to see a portion of that 3% be associated back to the used piece somewhere down the line. Obviously, the closer you are to new, the more that appreciation in value you're going to see from that price increases, and it trickles down from there. But usually in the first 5 years is where you see that really happen. And that first, the 0 to 5 year old machines are what drive the marketplace. Things on the other side of 5 years old have a different marketplace and a different market demand structure and a whole different thing that goes there. But as these machines continue to climb, you're going to see these things happening. Now, the other conversation I have with folks, this is where I want you to weigh in on this, Greg, well, weigh in on all of it, but the conversation I was having is you need to be prepared to not run these machines for a year or for 2 years, but you start thinking about a longer term stretch when you're looking at these machines, right? You're looking at instead of maybe doing an annual roll, maybe you're doing a roll every 2 or 3 years, or maybe you're going to run a tractor for 5 or 6 years before you trade it in to get the good out of that. Because this market right now is showing us that class 9 or class 10 and 11 combines that are out the door between 800 and $1 million, depending on what you got set up there. The auction values for these cash on the barrelhead numbers on these things are 550 to 650 for a 1-year-old machine with 250 separator hours on it. That's where those are falling into.
So, yeah, you're right. I mean, new and used, the markets have always and will always be connected at the hip. They just are. And so I think one of the interesting things, I always, as I look back over 35 years analyzing this space, a picture of a merry-go-round carousel often comes to mind. And sometimes that carousel gets whipping pretty fast and it's hold on for dear life. And, that's when the money's flowing in ag, like we saw, different periods. And then on the dealer side, of course, you're driven by market share. So you put more on trade, that whole thing. And then we see when the merry-go-round slows down, different things happen. Yep. And we've been reporting on that. And, when the dollars are so big now, that's the thing. Yep. It gets inefficient and sticky. So even if the guy's peeling off a mud deal and not buying as much and as frequent, he goes to the dealer and the dealer in essence doesn't want his trade in. So that's the merry-go-round slowing down and things get mucky. Now, one thing I would say, 35 years of reporting data every day, probably the number one truth, if you nut this down, is that what farmers have always wanted, and it's a little bit of that different market you talked about, but still true. And I know what they'll always want is 10-plus-year-old stuff in great shape with low hours.
Sure.
And if you have that, no matter if the merry-go-round is whipping or it's like sticky, slow as hell, you have what every farmer wants. So when they're tightening their belt and they look around, that's why that 2084-10 just brought 135. Now the guy who wrote the check, corn is the same price. You just said it. It was 51 years ago. It's the same price. Now what's interesting is in 1974, that merry-go-round was warp speed. So fast that, I was only 7, 8 years old. I wasn't tracking prices, but my dad started in the mid 60s, said, well, it was a lottery system. If you wanted to buy a 4430 or a 1066, put your name in. Now, where have we seen that recently?
Oh, yeah.
Not too long ago in the rearview mirror, right? 21, right. 22. So that's that merry-go-round. It's fast, it's slow. And that, I think what we talked about at Yield Academy and what those people were asking you when they ask the price of new, to me, you just don't want to get caught having to do something at the wrong time, machinery-wise, because these dollars are so big now that you want to take advantage of selling it at the right time. And conversely, right now, I mean, you just said it on combines. Look at that 24 model S790. I think someone got a great buy there at 430 yesterday.
They sure did.
When not many people were feeling like buying. So again, it's a fascinating market to track for sure. But I think just think of a merry-go-round, and when it gets going high speed, you're holding on to the pole. You're like, your legs are out. You're like, oh my God, I'm gonna get thrown off. But just hang on, and hopefully, better days are coming.
Yeah. Yeah, the merry-go-round thing is a pretty good example of that. I remember when I was a kid, we had, the fastest kid in town would be the one that'd get the merry-go-round spinning fast as he could go, and then the game was who could hang on the longest one type of thing, right? And
also, how did we survive that? We used to call them pupilators in West Central Minnesota when I was a kid, and you'd be hanging out vertical or horizontal. And where were mom and dad? They were, I don't know, but we survived, I guess.
Yeah, and you're right when you look at that concept. I loved riding the merry-go-round when it was going, a few miles an hour, not Mach 1. And it was a lot easier to hang on to. And I think as you're looking at this marketplace right now, we're spinning fast enough now that no one's going to, everyone's hanging on by one hand right now. Right. And their grip is slowly starting to pull away. And in some cases it is totally pulled away. In some cases it's getting tighter, depending on what the situation looks like. But this is indicative, like we've talked about in the past, of any market that you look at where you're coming out of the bottom, right? We've hit the bottom, we're bouncing around. And just like you talked about, you're watching these combines sell, and every other sell is a different story, right? Some of them sell really good, some of them sell middle of the road, some of them sell horribly. And then you go back up to where the next week everything kind of leveled back out again, and you're starting to see this thing. Then the next week comes along, you see some volatility come into play. And so I think if you're in the market right now to buy or sell a piece of equipment, right, whatever you're trying to do on either side of that, pay close attention to what it is that you're selling and what that marketplace is looking like. And if you need some help with that, there's go to your local dealership, talk to them about what's going on there. Also, there's a million resources out there where you can find all the data you need to have about what's going on. And you can get a hold of us if you want to. We can talk through it with you. But I think at the end of the day, it's one of those things where you're watching things move along, and we're at the tipping point where a bunch of bad news is going to drive the market down further, and a bunch of good news is going to make it come up. But if everything just stays status quo, it's not going to change. And I think that's where we're at right now. And it's a to-your point.
You mentioned before, folks asking you last week at Yield Academy, on the price point, and then mentioning that, basically folks holding on to their equipment longer in this environment. And that to me, again, if you step back far enough from the merry-go-round so you can see the whole merry-go-round, you get up close and all you can see is like, oh, you really do need to do what you talked about and try to get as much perspective. And that's why I've spent a lifetime compiling these auction prices to put in one place where a click you can see those Case IH 715s or those John Deere S790s. And then, just make a more informed decision. But as it stretches out, if we go another 6, 12, 18 months, that builds up a whole lot of pressure, man, because farmers, number one thing they got to have is reliable equipment.
Yep.
And when it comes time to harvest, last harvest was great. Weather was awesome, went fast, but no guarantees. We had rained all summer up here. Now who knows when it'll rain again, right?
Right.
So they need reliable equipment. And if we stretch this out another year plus, then you're starting to, I'll just say this, that would just make the nice 10-plus-year-old stuff even more freaking valuable, because dollars are still tight and you need reliable equipment. You want Joe's that's got low hours and one owner, or off your dealer lot, local trade that was just right. So, it's interesting to monitor the merry-go-round.
It is. It really is. And as these things like these compression points that we're seeing right now, as these continue to drag on, it's like you're talking about, you will eventually suck out the filling that is that everybody wants to buy, and so sooner or later that supply and demand thing becomes wildly out of control. And I think we've seen that before. If you go back and look at like um, 2017, 2018, 2019, if it was $75,000 or less, $100,000 or less, um, you're selling it as fast as you got on the lot,
right?
At whatever you're asking for it at, right? And we're starting to kind of cascade back into that now with that stuff, which then that takes that, and then what it ended up ultimately doing is that the price ranges above that now are the ones that you start seeing reduction in pricing, because in order to get people, because there's not the buyer for that $125,000, $150,000, $200,000 something is so hungry to buy something, right? Because they need to buy something, not because they want to buy something.
Right.
That you start shuffling those numbers at the top down to be closer to those price ranges, where you can start maybe working some deals to make things come into play. And that's when you start seeing ultimately start the top end of that pyramid start to come down. And we are seeing that, right? If you look at where retail pricing is across the board and how much it's come down, it's significantly lower than it was this time last year, significantly lower. And I kind of talked to a friend of mine that this reminds me a lot of, I was 8 years old when this 5 to 8 years old when this is going on, but the old 80s stagflation thing where there's supply is coming down, but price isn't moving with it. It's just they're kind of converging more and more to a point where you're seeing you're still seeing $430,000 combines get sold that have 250 hours on them that are 1 or 2 year old machines. It's just there's one less on the market now. Didn't do anything to price. We haven't seen any price movement because of that. And as those things keep chucking down, the price still stays here. The volume still keeps coming down, but the price isn't going up or going down with it. It's just staying middle. It's staying in the thing, which is showing you where the market's at right now. That is where the market's at. And it's not based on anything other than the available capital, interest rates, and what commodity prices look like in future buying. Because you and I both know, if you're farming right now, you're looking at, here's what I think my crop is going to be worth, and here's how much I think I'm going to have. And I'm going to start making decisions on that post-harvest around those criteria. And I think that's what you're seeing right now. It's not, I'm seeing 375, 380 corn, front month corn, which means I'm probably going to get 350-ish at the elevator, 360 at the elevator when it goes across the scale. And I'm going to have X number of bushels. Here's what I got to, here's what I got to pay, and here's what I can afford to buy for a piece of equipment. And if I can get a good buy, like you talked about earlier, on some of this stuff, that's where I'm willing to pay at. And I think we're not seeing a marketplace that has anything other than showing some just stagnant movement in the marketplace.
Yeah. Well, again, like you said, a year ago, I mean, look at that example on that S790 that sold yesterday at 430 when Ecoback and MachineryPete.com and end of 24. Again, we saw one go 497, another 482. Again, one of the other truths all these years, and particularly right now, talked about it last week at Yield Academy, but to me, that 2 to 7 year old, 3 to 7 year old stuff, that's value buy right now. Just because those dollars are so big. But again, to me, the interesting piece, like you say, is if we stretch this out, that scenario you just painted, when we just chip away, the inventory situation is so much better than it was a year ago on the dealer side. I mean, still, they would like to move, obviously, but if you stretch this out another year or two in this environment, all you're waiting, when's the spark going to come to the commodity markets? Beans and corn, and if it hits when the inventory is kind of worked its way down, and people have been tightening that belt for a long time. Whew, that's the 1973, that's 2008, that's 2021. And now these dollars to buy a new tractor, combine, planter, sprayer, whatever, are so massive. And like you say, those new price points aren't coming down. So again, tremendous opportunity right now. And I'm not shilling when I say this. I'm not shilling for dealers. I'm just talking from a data perspective. 430 on a 24 model S790 with a couple hundred SEP hours. I mean, Machinery Pete, congrats to that buyer. Whether that's on the auction lot or calling your local dealer and getting a good deal right now, because you can get some really good value on this later model U stuff, I think.
Yeah, for sure. Absolutely. So good place to stop, Greg. Best place for folks to reach you if you want to come speak or something like that. Just go to machinerypete.com, hit the contact thing, and have them fill out the form there.
Get our phone number, toll-free number, or email right into our office. And I got a few gigs coming up here and a few auctions down the road. It's always fun to get out.
Right on, Greg. We appreciate you being a podcast this week. We'll catch you again next time.
Sounds great. Have a good week, Casey.
Right on. Stay tuned for more Moving Iron podcasts after these messages.
Looking for more accuracy, more productivity from your current planter? Let's get exact with precision upgrades from John Deere. Start with Exact Emerge and get accurate singulation and spacing at 10 miles per hour. Or choose Exact Shot to promote early root growth and cut fertilizer costs. And with Furrow Vision, save time by verifying seed depth right from your cab. Visit johndeere.com/planner upgrades and see why nothing runs like a Deere.
All right, welcome back to Moving Iron Podcast Markets. I got Sean Hackett back on to talk about what's happening in the marketplace. Sean, how you doing?
I'm doing pretty good for a Wednesday morning here and getting ready for the day.
Right on, man. Well, we had the crop tour, Pro Farmer crop tour last week. And really kind of what I gathered from all of it, Sean, and I guess love your reaction on this, is that the Northern Corn Belt, Minnesota especially, things are going to be off the charts. It's going to be some of the best corn they've seen in a long time. Ohio was spotty at best. Illinois was kind of, there's some really good corn in Illinois, but there's also some really average stuff out there as well. Iowa sounded like it was going to be a pretty good crop coming out of Iowa. And Nebraska seemed like it was a little more on the spotty side. There's some good corn, some bad corn, depending. Lots of rain came late, and then also things got planted late too. So in some areas. So I guess overall, it didn't seem as as wonderful as what the USDA's 189 sounded the week before when they came out with the report.
Well, if you think of Illinois and Indiana being, not a whole lot better than last year, maybe a little worse than last year, give or take. Mm-hmm. You have Iowa, which, especially Western Iowa, looks super, super good, but definitely a lot of issues because don't forget the center of Iowa had near record rainfall, 35 inches of rain, and there's going to be a lot of issues with there are a lot of issues with disease and insects and
that was a big thing they talked a lot about with disease and insect.
And even northern Iowa is going to show that. Doesn't mean horrific crop, but it's just going to take some of the top off. Obviously, dry land, Nebraska ground and dry land, South Dakota ground that normally doesn't get rain and doesn't have, much crop. I would say that's where your biggest increases are. But when I look at the whole situation, where what I could say where it really, really counts, I think it'll be up a little bit from last year. I think what was last year? 178, 179, something like that.
Yeah. Mm-hmm.
I get the impression, it's between 182 and 185. I mean, I kind of get the impression that's a little better than last year overall, but because the Illinois and Indiana just not going to show big increases, it's really, really hard to get 189 without Illinois and Indiana having very significant year-over-year increase in production and yields, and it doesn't look like the weather wasn't that good in those states. They had a lot of drier weather. They had the warm nights were most egregious there. So I think what we've been saying, that the warm night scenario usually, doesn't typically produce a crop much above trend. I think trend line this year is 182. Depending on whose statistical linear regression you're running, and I think that's pretty much what the Pro Farmer said, that's going to be around trend line. And again, I think they gave a range of 2 bushels higher or lower. I think what they put out, based upon the history of warm nights, of excessive wetness, not a lot of hot daytime temperatures, getting a lot of cool weather here at the end, which soybeans specifically don't like to be wet or cold. Having a lot of dry weather out east to finish off the crops, which is going to take them down even further. I don't think that you can argue that their yields off, but if you look at what happened last year, everyone goes out and tells you that they're always 5 bushels an acre too low, and that, but that's not really actually true. That's an average. Half the time they're pretty close, and the other half the time they tend to be on the lower side. But I think it's important to know, when do they tend to get it closer to the truth? Like, when do they tend to be better at it? Years like this, where statistics, which is what the August USDA report is, might be deceiving, meaning like what you see from the road isn't what you see in the field. I think the agronomy work in this instance is going to be far more accurate than a typical, well, this is how the crop looks, and because of the crop looks so good, this is the yield we're going to project, which is essentially what the USDA does. And so my work says that Pro Farmer is probably on the right track. We have to see, is it too higher or too lower? But anything 185 or less, and my view, the corn should be mid upper fours, and the closer you get below, let's say you get under 182, and you're back to upper four, lower $5 market like we were last year. So obviously, at the end of the day, the market will not trade Pro Farmer a whole lot just because they're not going to, because of the of the claimed historical inaccuracy of the tour. But agronomically, from the data and the weather and everything that took place this year, and looking at past years that had similar type of weather conditions, they're on the right track. And so I think ultimately, when the combines roll where it counts, and we start measuring what's actually coming off the combines, I think we're going to move those yields down under 185. And then it's just a question of what's the exact number. Either way, we don't have to wait too long to get that information from. We're going to start rolling those combines where it counts here pretty soon, and the market gets an inkling that we're below 185. The corn market, especially the corn market's going to rally. The soybean market may wait a little while because we harvest them. We do a little more corn first and then soy second. But overall, I think markets will rally once it becomes clear that Pro Farmer is closer to the truth. And we put the statistic out, 17 times since 1950, the USDA has increased yields in the month of August, and 15 out of those years they were lower by the January report. So the odds strongly favor that we've just printed the highest yield for the year, and that yields are going to come down. Especially, we've had 5, borderline 6 years that had a wet, warm night, not record hot daytime scenario like this. And every single one of them was lower in January than it was in the August report. And in many of those cases, it was a meaningful amount below. And neither one of them was the best case in any of those years was trendline. So it doesn't mean this one can't be a little bit above trendline, but I really do feel, despite all the criticism, Pro Farmer's on the right track from what we've been saying all along. It makes sense to me with what they saw. And it's just not something the USDA would have any idea of calculating in their August report. In September, they start doing a little bit of agronomy. They put a little agronomy in. So, they might move yields down a smidgen. It's the October report where they really, really, really use agronomy in a much wider statistical sense. And that's when we can start to see more significant adjustments downward and then of course they eventually, tweak until January, and then sometimes they do a final notch down in the month of January, like they did last year, where they make an initial adjustment, they keep it steady, and then they drop their pants at the end. Test weight's going to be important, Casey. In a year like this, test weight is going to be on the lighter side, and people always tend to think it's volume, but it's really it's volume. But it's volume and test weight is how yield is calculated, not just volume. You can have the same volume in 2 years, but if one has a lower test weight, the volumes are the same, but the yields are lower on the lower test weight crop year. So that's another thing to watch about showing and lower test weight coming in, which is fully expected that we would see something like that in a year like this. Also remember, because it's been cool, well, let's put it this way, because we've had normal daytime temperatures, no extreme heat, and we're finishing the season. I think this week we're in, Casey, is the coolest last week of August in 38 years. 38 years. You got to go back to the 80s, the last time we had an August this cold. So the weather's telling you, a colder September is coming. We've talked about late September frost risks, and a lot of the crops, because they've not had the growing degree days this year that they normally do, are going to struggle to finish before frost comes in. And that would be something that could take the northern yields down a little bit. Even though those look good right now, you throw in a frost in late September, even early October in areas that have not seen the crops come through to maturation, you'll take some yield off, and unquestionably you will, and you'll take some quality off. And that would be another important thing to watch, because if you take those big areas that are showing the big year-over-year increases and you take them off just a little bit, it makes it even more difficult to get anything close to what the USDA is suggesting. And it may mean that the pro farmer torque could be too high in something like that. Last year, I think pro farmer came in at 181 and change, I think it was. And we came in below that number because we had a poor finish. And so that's, we'll see what happens. But overall, I think we should have made the final lows in grains. It doesn't mean it's straight up from here, because the market, is trust but verify, which is what the comments are going to roll. But I think we have sufficient evidence that the lows are in, and we can establish some kind of a bottoming sideways trading pattern. And I think that's, if you look at the trading pattern, what we've seen here in corn, soybeans, and wheat, I think that's what we're starting to do. We're starting to do up, down, down, up, down, down, up, down. We're kind of, the first thing you have to do in the bear market to end it is you have to stop going lower.
Right.
People, I always I said the most important thing in a bear market trend, the most important thing is to stop going down first. Go sideways. And most markets aren't a V. Most of them stop falling. Good sign. So we've stopped falling all of a sudden. We're not going lower anymore. It's not exciting. Everyone's still upset. But that's the first thing. Stop going down, which is what we're starting to see. And then start going up. And so I think we've now established that we're no longer going down, and now we're going sideways. So that it says to me that the bear trend of every week we go lower is over. And now we're just waiting to see when the market will turn higher. Another thing to watch for winter wheat, we're going to think about planting this crop in September. Weather is very important. And if you look at the setup with a weak La Nina, a negative Indian Ocean dipole, we've talked about the warm North Pacific and the cold North Atlantic, and you run that analog analysis, it says that we should have a pretty dry September here for where they grow, where they're going to plant most of the winter wheat. And it's going to, and in Russia, Ukraine, it should be really, really dry in September and October. So this could be the third bad planting season in a row for Russia, Ukraine, and maybe the first bad planting season we see here in 3 years. So if we develop some concerning weather in September, it would be highly likely that we'd be adding some weather premium in the least into KC wheat and SRW, Chicago Fair Trade wheat. So that's right upon us. And so, we're past the harvest of spring wheat, obviously well past the harvest for winter wheat. Seasonally, this is when the market in wheat starts to tend to turn up. And so that would be a catalyst to watch, for at least for the winter wheat market.
Okay. All right, let's talk a little bit about hogs here for a little bit, because they had a very decent summer, right? They had a pretty good run up. Things were looking really good. And then here over the last week or so, we've seen a pretty big decline in hogs. Probably looking to somewhere between 25 cents or so kind of come off the price of hogs. So I guess you're looking at the hog market right now, Sean. Is this a seasonal time that we see some dips right now, or is this is there a bigger culprit out there?
No, we really like the hog market a lot. I mean, talk about being in an uptrend. This is an uptrending market. If you look at the December contract, Casey, and if you just look at, let's just take a look at since the low that we made on July 15th was a hard low we made that day. We've been basically trending up, and in the past week, we've now, we're now testing, or actually have exceeded now the highs that were made on August 6th. So this market is accelerating to the upside, and looks really, really good. I continue to believe, and I continue to promote the idea that every company that's involved in livestock, whether it's JBS, whether it's Seaboard that does pork, or Smithfield Foods that does pork, JBS does everything. Everyone indicated strong pork demand, as they're seeing greater demand from consumers who are altering their budgets towards more pork protein than beef protein. And I don't see anything that's going to turn that trend around, given the comparative economics, and given all the concerns that the consumer has about the future of their jobs and the economy from AI, and such. There's just a lot of angst on the consumer side, and they're looking for ways that they can elongate their budgets, and consuming very attractive pork is something that they're starting to do, and especially as we go into the holidays, and people make those bigger protein purchases. I think we're going to see incredible demand for pork, and I think that and the supply side of the equation, I don't think people really understand how COVID crushed the livestock industry, and then so bad, and it literally destroyed the equity, almost the entire equity of these businesses over a 2 to 3 year period. And so now that we're coming out of it and we're getting prices back to where they're profitable again, there's just no appetite to just start shoving capital back into the business after taking it all away. They want to build that cash equity back in again before they even think about doing it. So building barns, and it's just not going to happen. And that's why the cattle cycle, the cattle rebuild cycle, has taken so much longer than it normally does, is because the cattle guy has been saying, hey, I'm just happy. I'm just going to keep it where it's at, and I'm going to keep selling these animals at higher prices. And why do I want to take any more risk at this moment? I mean, they're starting to do it now, but it's taken longer. And I mean, production's growing a little bit in the U.S. for pork, but it's onesies and twosies. It's not, given the demand that we have, it's not going to do it. And the only thing that those in the cattle industry and the hog industry are certainly trying to do is adding extra weight where they can, because we've got cheap grain for now, and trying to be a little more efficient on fertility, especially in the hog side. We've had lots of issues over the last few years of a higher number of piglets dying, and not being able to be finished off. And we're starting to see that efficiency improve. More of the piglets are surviving. They're doing a better job of managing the fertility process and the disease process. And So those are the things that they can do that won't cost them a whole lot, Casey. That can bring in some extra production, but they're not going to be spending any big capex for the foreseeable future. And that means, if I'm right about the demand, and the market's pricing is telling you the demand is good, and the people in the market who trade publicly that have to disclose this stuff fairly truthfully are telling you that it's happening. I like the hog market here. I think there's a possibility that the hog market over the next 6 to 12 months could make all-time highs. I think all-time highs are $1.30 a pound. I think. I think there's a good shot we could take that out, and do something to the upside like we've never done before. Because that ratio between cattle and hogs is so wide, we need to narrow it. And so the first way to get it narrowed is to have the hog price go up. And the second thing is to have the cattle price start to top out and then come down a little, and then you at least compress the ratio back to something that makes more sense. The record wide margin between the two was the widest margin by a fair margin in history. So, you can only pull over a band so far, and it has to eventually snap back. And I think we're starting to at least get the hogs to snap back to the upside. And now we're just waiting for this current cattle bubble to reverse. And the cattle market will reverse when either they start importing cattle from Mexico again, which eventually they will. I don't know when, but eventually they will. Or they start importing beef from Brazil again, and the tariff is eased back. Eventually it will happen. I don't know when. Or the consumer pulls back even more than they already are, and the demand finally gets itself underneath where supply is. They add more weights than people. I mean, there's a number of ways that you can reverse this parabola, which has been a perfect storm of confluence of bullish factors that have come together at exactly the precise time to create this most overvalued cattle market relative to all of the commodities in history. But the bigger the bull, the bigger the bear. And so, we're just looking for signs for when that happens. When we look at the rate of change, a 5-year rate of change of feeder cattle, for example, and we run that chart going back to 1965, there's only one other time that we had a rate of change over the prior 5 years that's higher than it is today. And that was the early 1970s. So we're in rarefied territory. We only have one other data point that says we could stretch a little bit more, because the feeder cattle are going to drive the market up, live cattle up, and they'll be the first ones to drive the live cattle market down. So once that happens, then your compression of that spread really, really gets going, and that's what we're expecting to see. I don't think the cattle market can sustain this trajectory for much longer. And whenever we make that exhaustion top and we reverse, and it goes limit down for whatever, several days on end, which parabolas when they end always do that, then then you'll know that the game is on between potentially ending the greatest cattle bull market of all time and maybe beginning or accelerating what could be the greatest hog bull market of all time. And that's where I think we're at.
Yeah. To your point on CapEx expenditures, it was on the cattle side, a couple of things I tracked to kind of show where cattle market's at, and those kind of things are direct correlations anyway. Or, loader tractors are one thing that you pay close attention to, and hay equipment, those kind of things are another thing you pay close attention to, and especially the loader tractor side of it. And for the first, coming out of the end of 24 going into 25, for as healthy as the cattle market was, the loader tractor market was just stagnant and still as it could be, right? And you're starting to slowly see it pick up. But back to your point, there was a lot of riding of ships there where they were taking care of their debt situation, right?
Yeah.
And really doing that, buying land, buying more cattle, doing whatever they were doing that was the first thing that they were going to take care of before they would look at anything else. Starting to see that break loose a little bit more now than we've seen over the previous 18 months, but it's still not as it's not gangbusters by any means, right? Like no one's beating down the door to go do anything else. But because I think a lot of guys are looking at this situation like you're just talking about, like, all right, how much longer can we be on this ride? And I think they're starting to see the nervousness when you talk to some guys out there. They're like, I can't believe how much these cost. I paid X number of dollars for a steer yesterday. I mean, it's just it's amazing what the prices that they're seeing come through, and then they're looking down the road going like, what's it going to look like when this group of steers I have now, what's it going to look like as I push them through to slaughter? And they're really starting to see some nervousness poke up.
Most of these cattle ranchers have been around 30, 40, 50 years. They've been around a long time, most of these guys. And they know what a parabola happens when you get into a parabola straight up. Mm-hmm. They know.
Yeah.
I mean, they don't need to know the fundamentals of the market. It's not the fundamentals of the market. I mean, markets don't go straight up for very long, and they always end straight down every time. Yeah. And so, we can argue it's another it's how much longer can it go? I mean, anybody can throw their hat in the ring, and maybe you got it right, maybe you got it wrong. But we know that once we start going straight up, it's an unnatural action of a market to do. And I don't care if it was lumber from a few years back or it was oats from a few years back. Coffee from a little while back or cocoa from a little while back. Parabolas, they have a fuse. And once that fuse burns out, that's it. And you whatever that high of that parabola turns out to be, is high likely going to be the high for the entire bull move. And then what you typically do is you typically establish some type of a topping pattern. And then it's the trapdoor after the topping pattern, the distribution pattern finish itself off. We've been doing that. We've been doing that in cocoa. OJ already crashed. Looks like we're doing that now in coffee. Obviously, we're trying to start that process in cattle. But remember, even though the cattle market may have a topping process, we could go from let's just say we go to 250. We go from 250 to 2 would still be historically a pretty good price, but to lose 50 per head,
big deal. Yeah.
I mean, there ain't going to be a lot of happy people at 2 from 250 if that's ultimately where we wind up.
That backlash is always you still have, like you said, you still have a historical high there at $2 at $2.
And when we're on this podcast, and let's say we're at 2. This is and the cattle ranchers say, "Well, I'm not going to sell now." That'll be the fatal mistake. I'm not going to sell here. I'll wait for surely the market will rally.
Yeah.
And and so what happens is there's still a profitable price in front of him. He still has a chance to still, be okay, but because he missed 50 down, he's not going to sell that, and then it goes down another 20, and then he sells that. Then the market rallies 30 or 40. And he doesn't participate. This is how the insidiousness of prices and how the emotions of producers takes them is they'll continue to make the wrong decisions at the wrong time, minimizing their income when they should be trying to maximize it. That's why I've been advocating, and this is not about picking the top. Forget about picking the top. At this point, if you're not making some sales, if you're not putting some LRP under your feeder cattle, if you're not protecting some downside price risks on the way up here on this parabola, you're not thinking correctly about your risk management. In my opinion, it's a no-brainer to continue to feed and reward this parabola, because by the time it's topped and turned out the other way, try getting some hedges on, try getting some sales on when you're limit down for 3 straight days. Good luck. The buyer's going to say, well, we're going to put in a factor well below the current close because we don't know when this market's going to, you know how this works. You really can't get out. You can't get out. You're trapped. So don't get trapped on the way down. Just sell on the way up. And who cares if you miss another 10 or 20 to the upside at these current prices? Just keep feeding it. It's the only way. If you think you're smart enough to pick the top, maybe you are, but probably you are not. I know I'm not, and I know nobody else that's smart enough to know how to pick an exact top in a parabola. But I do know, looking at the measures that I just mentioned to you, rate of change and the percentage above the 200 moving average. Only one other time in history have we had the modulus of elasticity stretched higher than today, early 1970s. One time. Every other time we've exceeded all the major bull market tops in the past. We've now exceeded. That is a license to lock in cow equity if I ever saw one.
Yep. All right. One quick other thing I want to talk about real quick, and just kind of hit it because we haven't hit it for a while, but I've been watching it and it's been slowly making its way down. It looks like we've hit a spot where, if you look at the year-to-date numbers on lumber, coming out of 2025, we were at a low of about 540. We made a run up to about in March at around 685. Get huge fall off in May, back down to the lows again, about 540 again, 538. And now we're back on the top side of the other side of the V right now. We're at 695. But here of late, going into late August, we're falling back off about 25 cents. So you're seeing this kind of whipsaw throughout the year here. Sean, as you look at lumber, what are your thoughts on that?
Well, I mean, the problem is, in order for the lumber market to do better, we need lower interest rates on mortgages.
Sure.
And the market says that the Fed said that they're going to lower rates in September, which should rally the lumber market. But I don't believe the market is entirely believing for sure that's going to happen. We've had a lot of false alarms on they're going to do it, now they're not going to do it, they're going to do it, now they're not going to do it. The other factor is, if you remember when they lowered rates a few times last year, the long rates went up, not down. So mortgage rates are not driven by the Fed funds rate, which is what they control. It's driven primarily by the 10-year yield, is how the mortgage rates are calculated. So I think additionally, even if they do lower rates, are we going to see the yields come down? Are they going to stay where they're at? Are they going to go up like they did a year ago? I don't have an answer for you, but I think the market's very nervous that we're not going to see the long end come down in interest rates. And if you don't see the long end come down, then mortgage rates aren't coming down, which means you're not going to get business activity. So I think that the lumber market is not believing that long-term rates are coming down. Now, they may be wrong about that, but that's how they're trading it. They're trading it that despite the Fed saying they're going to lower rates, housing demand, new home construction is going to be weak. And that means the demand for lumber is going to be weak. And on top of it, there had been a lot of optimism that we were going to see a large build out in Southern California from all those fires. And I don't think they've turned
They haven't done anything yet.
I don't think they've turned a wheel. No. Nothing. I don't even think they've applied for a permit, a building permit. So that all that demand that was like baked in the cake, it's definitely coming. He remember he came out the day after and said, I'm going to immediately rebuild everything. Nothing's happened. So lumber demand for lumber market is just not there, and so it's going to be tough to turn the market around. Now, if we lower rates and the long end comes down, that will be the trigger to get the lumber market going, and it could be explosive. But I think the market is going to. We said earlier in the show, trust but verify. First, let's see if the Fed starts lowering rates. Second, let's see if the long end, the 10-year yield, starts to come down. If we see that, then I think the loan market can have a nice rally here. Until then, I think we've fallen enough. I think where we are now, we might start basing out. But that's where we're at with the lumber market.
Okay. Well, Sean, appreciate you being on the podcast. Folks want to reach out to you, get more information about what you're doing over at Hackett Financial. What's the easiest way to do that?
The website is Hackett, HACKETT, advisors.com. We also have a Twitter page at Faradex11, LinkedIn page as well. And if we want to check on those places about what we're thinking, from time to time, we'll talk about different weather scenarios and markets. Like we just put something out on natural gas and the cold winter that we think is coming. It's a good place to check us out, see what our latest thoughts are.
Right on. Sean, appreciate you being on the podcast. We'll catch you again next time.
Sounds good, Casey. Look forward to it.
All right, stay tuned for more Moving Iron podcasts after these messages.
Well, there they are, mocking you. See you next year, loser. That weedy area that's got you thinking, man, I hate that spot. Wish I'd sprayed better. Get the last laugh with a sprayer upgrade from John Deere. Precision upgrades that can increase your sprayer's performance, like Exact Apply, advanced nozzles to give you more control at more speeds. It's just one of the many precision upgrades you'll find at johndeere.com. Now, let's see who's laughing.
Got Aaron Finnell back on to talk about what's happening in the marketplace. Aaron, how you doing today, bud?
I am terrific. And yourself, my man?
Can't complain any at all. We've got, it's fall. Well, it's still August, but fall's it's right around the corner here.
It feels like fall, man.
In High Plains. I don't know if it's that cold. It's not hoodie cold, dude. Come on.
It didn't hit 70 yesterday.
Okay. It doesn't mean you need to break out a hoodie.
Well, yeah, it does. I used to have a substantial bit more of natural insulation, if you will.
Yeah.
And with it being gone, boy, that's a game changer.
Yeah, well, I mean, I hear you.
I'm kind of only like fit for Phoenix nowadays.
I get where you're coming from on that one. I get where you come on. I'm like always at somewhere between nuclear meltdown and hot is where I run. So it's
very true.
You never know what you're going to run into.
That's just me on the inside.
Yeah.
Nuclear hot at all times.
Yeah, it's a different feel right now. And I was me and my wife were sitting out on the patio last night, and it was just about dusk, and I was looking up at the sky, and it had those those white kind of blanket of clouds that you see right before a blizzard.
Yeah.
I told her, like, that before too long will actually be a blizzard, so get ready. So we're right there. We're right there.
Bad news, man. Bad news.
And then we'll have last couple of falls have been awesome. They've been really nice, like an actual fall. You know what I mean? Like
they've been great for humanality, not quite so much for agriculture, as they've both been ungodly dry.
Well, yeah, that's good for harvest.
70s and 80s and sunny every single day is all right.
Yeah, that's not too bad.
Yeah,
not too bad at all. So that kind of rolls into what we're going to talk about a little bit today. I think this is the time of year where corn head decisions have been made. People are getting their corn heads ready to go and doing all the stuff they're doing. But you still see some corn heads pop up on the radar of folks that are maybe on the fence a little bit as to what's going on. Because we're still, in our neck of the woods, we're still, 45 to 90 days, depending on where you're at and when you got planted, and away from having, no, not 90 days, 60 days.
60, yeah.
Getting stuff ready to go. So,
well,
definitely.
It just depends how much natural gas and propane you want to throw at that $high corn to dry it down.
That's exactly right. Exactly right.
For that matter, pickup heads are going to be hot here pretty soon.
Yeah, no kidding, right? But if you take a look what's out there, so the really cool thing about the cornhead marketplace is that there's always been a multitude of brands that are associated with that. Of course, all your main lines have corn heads. John Deere's got theirs, Case's got theirs, New Holland, Agco. You're going through run down the list. That's what they're. But you start looking at like Deeringhoff and Maya's popped up out there a few times now. We've seen that.
Harvest Tech, Fantini, Tenuti, McDon.
Yep, all those different things out there, and they all have varying levels of technology. Yeah, Drago. You start looking at how they're working. Like take the MacDon for example. They introduced a year ago, I think, maybe 2 years ago, the flexible corn head.
Yeah.
Those kind of things. So that has several different aspects to it. So a big wide open space of what the corn head market looks like. But if you're running on the list down, you're looking at it. Corn heads are not cheap anymore, right? I mean, they're not like they ever were cheap, but now you really look at them now and you're looking at $200,000 corn heads new off the shelf, $250,000 corn heads new off the shelf, depending on what they are, if they're folding or all the fun stuff that they have. But watching the stuff roll through, you see a few things happening where there are some niched areas in the corn head marketplace, and just like everything else, it feels like it's that that 5 to 7 year old corn head is what's really getting the biggest play a little bit. We start looking at what's moving, and it kind of goes back to, like we've talked about everything else here, where it's a price market, and that's just like in balers, row crop tractors, combines. You run down the list. There's a segment in there that's moving better than others because it's based around that price. Right. I guess as you're looking at the corn head market, Aaron, what are you seeing?
Good timing to take a drink.
It was.
You're right as far as what's moving. But I would say it's in the more of the 2 to 5, just because on the deer side, that gets you into the what I call the C series of corn heads. C12R instead of C or 612, 712. That gets you into that ball game, if you will, and those are starting to click as they because those heads also, you get them down under 100, and then you start talking and moving and all that business. Yep. So you have some of your, I would say a lot of your first year C series heads that are down in that ball game, ready to play. So on the deer side, I would say very much. Across the industry, it's really pretty much the same, because it's like you said, Casey, it's a price market,
right?
And that header, I know it's a big range, but 50 to 100, you're banging them all day long,
right?
35, a lot of guys are past that one. 125, nobody wants to give that. So, you're in that 50 to 100 category a lot all day. And that'll get you anything from a 17 612 to a 22 C12.
Yeah.
Which, and 12 rows obviously the most common size. But that's what I would just echo with you with what's popular out there now. One thing that I think is nifty, if to use a silly term, with all the different corn heads out there and the ones that have shown up, I can remember being a demo Harvest Tech corn head dealer in 2001, and these white heads show up, and they're so neat. They have electric deck plates. Look at that, all of those non-major cornhead companies that have shown up. The cool thing about it is they all offer something else that eventually, in a way, shows up on the majors. Okay. Go back to 2000. How many New Holland, Case IH, same head, John Deere, Agco cornheads? There was no such thing as Rollicones on your cornhead, right?
Right.
And then Fantini, Tenuti show up, and that's the only way they come. And a couple series later, well, look, those case heads have them roll cones on the end. Yeah. What's up with that? And then like the Drago spring-loaded strippers, they must have a crazy patent on that, because that hasn't shown up anywhere. But and I think, is it Maya that has like the gathering chain in the snoot, kind of?
Yeah, I think that's something like that.
I know you can. Yeah. I know you can go like cross rows with them and stuff. Mm-hmm. So like everybody, which that's a big thing, because out here we've got 20-inch rows are up and comer.
Yeah,
or we know for a fact we live in a world where there used to be 22 beets and 30 corn.
Right.
There you go.
Yep.
You can use both planters to plant corn in one head. Yeah. So that's what I think is cool about it. Everybody that comes to market now has some kind of differentiation that they have created themselves, as far as we know, and put it out there in the marketplace, which brings to mind the creativity from the majors to Oh, well, you mean we have to do more than just turn our metal heads into plastic?
Right.
Like we have to we have to have more than 2 stock roll options for 30 years.
Yeah.
It just starts the ball rolling with, we better pay attention to this, and maybe we should tweak.
The stock roll thing is a good example of that. There's like 5 or 6 different stock rolls out there now that you can pick from. You know what I mean? And so, I mean, you start looking at how, so like, you start thinking like a chopping corn head, right? That was always, when you start looking at residue management and those kind of things, and how that machine comes through and it goes through and what it does to the residue and the size of how it chops it up and all that fun stuff. That was getting to be a bigger thing. But the thing about there's a couple things about the chopping corn head that were always kind of a drag on the sale of it. The first part of it was the cost associated with it. And the second cost of it was there's always linking back to just robbing horsepower someplace, right? So that was always the other one that they were going after. But now you start looking at chopping stock rolls and those kind of things that do a similar job that a chopping corn head does with not as much cost, and obviously you're not having the horsepower thing. That's not an argument anymore. So as you're looking at those things kind of roll through there, that transparency of, hey, you know what, we heard what you said, so we're gonna try to figure out a way to make this work for you a little bit better. Sure. You're starting to see a lot more of that technology roll into corn heads. And also too, on the other side of that, the thing I find interesting about the corn head marketplace is combines have gotten way bigger, but for the most part, corn heads haven't, right? There's some companies out there that make a 24-row corn head and those kind of things. You're seeing those kind of things pop up, but it's not as peanut buttered across the marketplace as you think it would be.
No, and even out here where there's no such thing as fence or trees along the road, or ditches, half the time, where we move field to field with 16-row, 30-inch heads, whatever. That's just life. But even out here where that header could be everywhere, they're still not. Just because it's 40 feet wide. It's super heavy, and it takes a lot of monster behind you. So to your point, Casey, you could get a 1243 brand new with your 8820. There's only one header bigger than that right now. 40 years later.
I know. And that's the thing about
now, you can put 3 of those 8820s in that X9 if you want.
Sure.
Won't even hurt a chopper knife out the back. But the head's only 2 rows bigger.
I know. And the thing about that, if you look at the evolution of platform heads, I mean, we're up to 60-foot heads and something. Well, 60-foot. I think you can get a honeybee. It's a 60-foot head. You know what I mean? But that width of header has changed as combines have changed.
Oh, for sure.
Right. And you watch combines change, like you just said, like, was it 10 years ago, the 16-row corn head came out, that most manufacturers had a 16-row corn head?
10 would have been 15. Yeah. 10 to 15 years ago.
Something like that. Right. So, and then it was, like, I saw the first Geringhoff 24-row corn head 5 to 6 years ago, probably
5 or so.
So, I mean, if you're looking at that evolution, it's just like went from 6 to 8 to 12, and 12 hung out for a really long time as the big daddy, and then you hit 16, and that's still there, and now you're looking at 24-row. But the adoption rate of that 24-row corn head, again, I think the difference between like a 50-foot head on a platform head is significantly different than a 24-row corn head.
Oh, for sure.
You know what I mean? Just the amount of machine it takes to run 24 rows of corn at a time through it is completely different than, I could put a 35-foot, 40-foot platform head on my Class A combine, right? But I could also operate a 50-foot head if I wanted to. Right. You're going to go a lot slower, and I don't know if you're really gaining anything, but you're gaining. You can still use that head. I can't put a 12-row corn head on my Class A combine and then go run a 24-row corn head on my 24-row combine. or my Class 8 combine and have a similar experience.
Oh, no.
You know what I'm saying? Like, it's a completely different animal.
Right, but you just doubled it too.
Well, sure. Okay,
so platform-wise, you'd be going 30 to 60.
Well, okay, so you went from 35 to 50, right?
Okay.
So you'd be going from 16 to 24, right? Even I went from a 16-row corn head on my Class 8 combine to a 24-row corn head on my Class 8 combine. It's a completely different animal.
Corn, man.
I know, it's a completely different animal, right?
Right.
So the point I'm making is that
8 rows of beans, we'll grab them. 8 rows of corn, oh shit.
Exactly. So the difference between the reason that's the biggest draw on that is the horsepower and the size of the machine absolutely matters on the corn side more than it does on the small grain side, right? It's a bigger animal. Now, you're not going to be using a Class 8 combine like you would be a Class 6 combine and wheat, right? Totally different animals there again. But if you're looking at platform to platform, you're limited on the performance you see with the corn head. And I think that's a big difference in why, even these big, Class 10, Class 11 machines that have been coming through, you don't see this huge swing in, we just got to get that 24-row corn head. A lot of guys are jumping into that, but at the same time, they're like, 16 is working just fine. I don't, because again, like you said, I got a 40-foot head going down the road. Do I need to pay the extra $100,000 to get it folding? And that's the part about those corn heads. So they're already expensive anyway.
Right.
If you start adding, folding components and flexibility and next thing you know, you're $250, $275 for a brand new corn head. And that is an incredible amount of money.
Because that saves an hour.
Yeah.
Or a half hour at every field, having to unhook, put the head on the trailer, hook the header trailer up, go to the field, unhook the trailer, put the header on.
Yeah.
And I went, done.
Yep. I get it, but at the same time, it's
like power fold.
Yeah.
That was 30-40% take rate first couple of years.
Yeah, now you can't. You find one that doesn't have
combine with a manual bit.
Yeah, I mean that's
still has that ladder in the back.
Yeah.
Still super easy to get up there.
Right.
But sure like to hit that button on the screen.
Yeah, it makes a big difference in it. And those are those creature features that you see on some of the stuff that beforehand we're all like, well, it's the same conversation I heard when Auto Track came out first.
Oh yeah.
That's so stupid. Why do you need that? And now. Solar flares coming what are we going to do? Like, you know what I mean?
Yep.
I ordered my planner without row markers. I mean,
you can't get a guy. You could give away markers and they'll take them off.
Yeah. So, I mean, that's just the evolution of equipment, what you see there. So, long story short is, looking at that marketplace, obviously you talked about the sweet spot we saw there, but looking back at how the size of equipment's growing up, it doesn't feel like there's definitely a place for 24-row corn heads, and I think we're starting to see those be more and more prevalent. It's just, it doesn't feel like that's taken. I remember when the first 45-foot Macdon flex draper came out.
Oh yeah.
And listen to you like, who's going to use that?
Right.
Who's going to use that thing?
Nobody even has fields fit for that.
And now, good luck selling a platform head under 30 feet.
Oh yeah. You
know what I mean? Like,
it's export.
Somebody was like, I can't.
If it's under 30 feet, it's export. Plain and simple.
I mean, this was 6 years ago. Can you guys find 25-foot flex heads? I'm like, probably. I think they still make those. You know what I mean? Like, it's just like stuff like that is just how much the equipment's changed over time, and then what went from how those evolutions have happened, but.
Well, and then the other thing, as we talk, and we talk about harvest equipment a lot because combines are they're the bearer of bad news for 50 years running in the dealer world. But
of the market.
The other thing we talk about a lot with harvest is the bottleneck, right?
Yeah.
I know places where guys run Class 6 machines with 12-row heads, 35-foot flex drapers.
Yeah.
And there's plenty of them that way.
Yep.
And the combine never stops.
Yep.
Okay. I also know guys out here that would never own anything less than a Class 8, but aren't going to own a header bigger than 35 also.
Yeah.
So you got two farms just clicking along all day. One combine could eat the other one, and the header's the same.
Yeah. Yep.
It's
exactly right.
There's so much involved with it, other than if it was so simple. If the giant combine was a magical harvest wand, the countryside would be covered in 8800s and X9s.
Yeah.
That couple AF11s.
Yeah. It's true.
Here and there.
That is true. That is true.
Mostly 8800s and X9s.
Yeah. All right, let's talk a little bit real quick.
And a few diehard S98s here and there.
Yeah, I saw a couple of those the other day when I was driving back from Rochester, Minnesota.
I saw another outfit heading back south, Gleaner Custom Combiner.
Yeah.
I actually stopped and watched. It was beautiful. Yeah, wasn't that like end of the year quad track? Or no, spring.
Let's see.
I think that was this spring, maybe, Iowa.
All right, so we watched another one of these sell. It was Matichek's had that. They sold it for $579,100, and that sold February 27th of 2025 of this year, and it was a 24 model. I came back in, but it was PTO 6 hydraulics. Had all the stuff on it. So interesting to watch.
Oil a minute.
Yeah. Yeah, there's actually another one too. I just found. I didn't realize this one sold. There's been two of them that sold so far. Had 710 hours. So one had 710 hours, sold for $579,100 in February. Then there was another one that sold with had 225 for hours on it. 8 hydraulics. Wow, really getting carried away with the hydraulics now. You can before too long. How many hydraulics I think have? 25, 30? I don't know. A bunch. And
we've never even used 4 of those.
I opened his cupboard up, and there's a whole other row of hydraulics back there. I didn't realize they were here.
He rebuilt our disc so every gang moves hydraulically.
Yeah. This one sold for about 18,000 less. It was 561 with about half the hours on it, a third of the hours on it. And
right.
So that one sold in Indiana. So Minnesota, Indiana, sold through there. Be interesting to watch this one sell. This one's got 200 hours on it, if I remember correctly. One selling today has.
Speaking of 4-wheel drives, how long do you think we are till the PTO becomes standard with a deduct to remove it?
Quite frankly, I don't know why we're not there yet.
That's kind of what I wonder.
Because it's, more and more people look at that's the first thing I get asked when someone's talking to me about a 4-wheel drive. PTO? No.
What's the second question? High flow?
Yeah, high flow. That's the next one.
Does it move?
Yeah.
Okay.
That's what you get. I think this one has 250 hours on it, if I remember right.
Right.
So I'll be interested to watch this one sell. This one's up to 476 right now. Watching that roll through. So that's the big high horsepower tractors, and they're setting the market right there. To see these 3 of these already on the auction like this is a little bit shocking to me. I figured that we would be way into like 1,500 hour, 2,500 hour machines before we saw something like this pop up on the auction place. But
especially with 3.
250 hours. It is. I found it. It shows 250 hours. There we go.
Like one of them I would get, but 3?
Yeah, 3. And they,
there can't be that many more trade-ins yet than 3.
Well, you would think that's probably right, but it's interesting to watch, see what happens. And again, these high horsepower machines like this, as they push through, it'll be interesting to watch them play out because, again, that machine probably is out the door. I'd say, what do you think, 850, 900,000, something like that?
Probably.
Out the door.
So, 8.
Yep. So interesting to watch it play out and see how things move, and we'll report back on that next time we have the next week we have the podcast. So Aaron, probably a good place to stop. Folks want to reach out to you, get more information about what you're doing over at High Plains Wholesale. What's the best way to do that?
Well, we got High Plains Wholesale on TikTok and Facebook. I also share those same video specials via my own Facebook, which is just my name, Aaron Fintel, and my Twitter, or X, which is just my name, Aaron Fintel. So, 4 places you can see some wholesale specials, or you can call me or text me, 308-760-1193, and we can talk some deals. We can talk iron, whatever.
Right on. This is the High Plains Wholesale Sounder. It's right there.
Hot one coming. Hot
one coming in. Right on. All right, so check that out. Aaron's got a lot of good stuff on there. Always has it's an eclectic group of equipment that you have on that.
It is. I try to keep it fresh and very diverse.
Very diverse. Okay. Well, Aaron, appreciate you being on the podcast. We'll catch you again next week.
Right on.
All right, I'm Casey Seymour. You can find me on Facebook, Twitter, Instagram, at Moving Iron Podcast or Moving Iron LLC, LinkedIn, TikTok. I'm all over the place. Check me out. So go see me there. I want to say special thanks to Greg Machinery, Pete Peterson for being on this week, Sean Hackett for being on this week, talking about what's happening in the commodity market. A lot of good information there about what happened on the crop tour. So we'll get that. Check out his reaction to that when you listen to this. And also, Aaron, like always, appreciate you being on. Throw this out there. If anybody is listening to this right now and want to be the official farm sponsor of the Moving Iron Podcast, send me one of your hats in the mail, and I'll wear it and talk about your farm when you're on there. So you want to send me that, hit me up in the DMs, and I'll get you my address, and you can send that to me.
Just slide right in there.
Slide right in there. Actually, you know what? I'll just do this.
Slide right into the DM.
I'll just do right there. Just send it to my office, which is 1721 Broadway, Scottsbluff, Nebraska, 69361, office number 229. All right, so send that to me, and I'll wear your hat on the podcast. You send me a little thing about your farm, what you guys do there, and I'll talk about your farm, and we'll go from there. So appreciate you guys listening to the podcast. You can find the Moving Iron Podcast on AgWeb. Go to the podcast section there, and you can listen to the audio version. Go to the Farm Journal YouTube channel, and you can see the podcast there, and all the good stuff that comes with that. Check us out on Farm Journal TV and see what's going on there. So with that, I'm Casey Seymour with Aaron Fennell, Greg Machinery, Pete Peterson, and Sean Hackett. School Smart folks, out.
Thanks for joining us. We'll see you again next week. And remember, Moving Iron is available on Farm Journal's YouTube channel and anywhere podcasts are found. So until next time, let's move some iron.